Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 2nd, 2017. I wanted to take a look at the semiconductor sector. I have covered this recently, and in video and quite a few static posts. I've made it no secret that this is one of my favorite sectors. I think there's a tremendous amount of meat on the bone on this sector. Mixed response. I know some out there. I had somebody extremely bullish, thinks the semis are going to continue to rise for the next year, and maybe so. We'll see. But again, my conviction is about as strong as it's been in a long time on a sector. And all we need now is the timing and the sell signals. As I mentioned, I'm holding off as an official trade idea. Um, I am personally short and have plenty of room to add to this sector, and that's what I'll do in this video is cover both the sell signals that we're waiting on to really give us a high probability entry, one with a much lower chance of being stopped out. And as well as I wanted to go over some of the individual semis. And forgive me if I pronounce it wrong. I think it's TEPS01, could be TEEPS01 in the trading room. Had asked my thoughts on AMD, which I'll cover here, as well as if I had any preferred individual short setups in the semiconductor sector, because their broker won't that has a very high requirement on a margin requirement on shorting SMH. And let me add this. There are some sectors where the individual components move in very tight correlation with one another. Gold stocks are a good example of that. You look at GDX, and on those big up days, you can almost be assured every component in GDX, or most of them, are moving up, and on the big down days, same thing. Semis, there are, especially with these semiconductor ETFs, there are different subsectors in the semiconductor industry. You have the chip makers, you have the chip equipment makers. There's flash memory. There's all different types of chips out there. So, and with that being said, the charts on some of these stocks are completely different at any one point in time. And I'll go through this video. There's some stocks I wouldn't touch with a 10-foot pole on the short side right now, and there's others that I'm screaming, that scream short. So you get a little mixed bag here, and I think this video, especially for those of you that are comfortable with individual stocks, might take some benefit from that. And if nothing else, as I go through the ETFs, the charts of the ETFs, as well as the individual components, it will kind of paint a bigger picture, because I'll start with the individual components as far as market cap goes. The 800-pound gorilla. We'll look at Intel, the big ones, Broadcom, Qualcomm, Texas Instruments, NVIDIA, and go down the line. And therefore, if you can make a case that those big mega cap leading chip stocks are going to fall, and more importantly, the charts are in alignment. That's what I'm looking at. I'm looking at trend lines that are coming in right together. So when they start to crack, you're going to see one after another, and that will only help reaffirm an entry in the sector. All right, so let's dive into the charts here. I'm going to start out with the three main ETFs that I've covered lately. XSD, this is a Spiders S&P Semiconductor ETF. We'll look at SOXX and SMH. I'm starting out on a 60-minute chart. If I don't specify, right up here in the upper left-hand corner, it shows the time frame, and I'll look at the three main time frames I like to look at when swing trading: 60-minute, daily, and weekly charts. All right, this is a 60-minute chart. This is a pretty well-defined uptrend line. By well-defined, I mean numerous reactions off that trend line. You can see negative divergence here. So that's what we're waiting on, and I could probably add some horizontal levels here. But let's watch this level on XSD. In fact, I'll set an alert right now just to kind of give me an early heads up. And now let's zoom out to a daily time frame. All right, the bigger picture shows a very steep and clear negative divergence forming. We had a divergence high here I often talk about. Each of these were minor uptrend lines, and there were divergent highs, and they did play out for corrections. I use a log scaling on my charts. It might not look like much, but these are big pullbacks. These are probably 8-10% or more on these pullbacks. And now what we're looking at is a much larger, these were minor uptrend line breaks, as is this current yellow uptrend line, within a much larger, which is now fully mature bearish rising wedge pattern. By fully mature, at this point we didn't have a trend line. These trend lines were only created from this point here. We had a third reaction, and now that gives us a valid trend line to watch. And so now we're getting to the point, this could certainly work its way up, continue to work its way up within the wedge, but we're getting close to the point where it breaks down. And based on the proximity of this minor uptrend line, which is very well defined, that's also that 60-minute trend line we just looked at. If that breaks, which I suspect it will, it's so close to the primary uptrend line that we may get a reaction there real quick, but more than likely it's going to take prices down through there and then trigger even a more powerful sell signal here on the daily chart. And I think minimum target, you can see these two targets here, minimum target's $56. The XSD is at 60 and change right now, so that would give us a drop of about 7%. You can use a 3-time leverage ETF, and it should be a quick move, and that'd be 21%. But of course, then you really need to adjust your position size down for the leverage, so it's all a wash. Call it a 7% move, unless you're getting crazy with the leverage there. XSD weekly chart. This is long-standing divergence. It is divergence. It is valid, but it's been building for a long time. And, there were smaller divergent highs in here like this one marked, and there was a drop. These divergences do play out, and they're typically commensurate to the scope of the divergences. That small divergence there was good for about a 25% drop in the sector. Just as bullish divergences down here, there was a bullish falling wedge, and prices broke out, and that's what really led to this uptrend, at least from this period of consolidation. We had about a two-year period of consolidation. So again, here's that uptrend line we were just looking at on the daily. You can see it on the weekly chart. So if you want to know my expectation for this particular ETF, I do see horizontal support there, pretty decent support. And I think it's time. We haven't revisited or visited this trend line in a while, so I think that's the most likely move. If you're a swing trader and you don't want to try to game all the little counter trend bounces, I think it's safe to say that we're going to fall from 60 down to about that 45 level. Keeping in mind that a trend line is dynamic, meaning that because you have a positive slope on a trend line, prices come in higher and higher every day. If it were a waterfall sell-off, both the trend line and that horizontal level come in at about 25% below current levels. However, the longer it takes to get there, try not to grab that. I'm just going up to the level we're at. The longer it takes to get there, the lower that drop will be in percentage terms. But as I've maintained, I'm looking at least a 20% correction in the semis. That should happen sometime this year and likely kick off soon. All right, we'll stay on the weekly time frame. Let's jump over to SMH. I have various charts. You can draw different uptrend lines, different trend lines, but this one I'm showing a divergent high. We had a divergent high and a rising wedge there. It broke down. That was good for a 29% drop. You can see that was also confirmed with negative divergence down here on the PPO and the RSI. Fast forward a little bit, we had a correction of prices and overbought conditions worked themselves off. The divergences were worked off via a nearly 30% correction, and now we've moved up into a even more well-defined, a very steep bearish rising wedge, also confirmed with negative divergence. I don't expect anything less than a move down to the 60, we'll call it 61 level. I have 60 right there when I hit the line, so that's good for a drop of, again, roughly 20%. So right now, that's my preferred, we'll call it preferred swing target, and we'll just go from there. If that plays out and we get down towards that level, would certainly expect a reaction, maybe go long for a bounce, and depending on how the markets look in the semis at the time, I'll make a determination whether to recycle back in and hold out for more, but it's just way too early to tell right now. Back down to a daily time frame. Here's SMH. I've put up a lot on this chart recently. Primary uptrend line right here. This purple, we had a little brief breakdown right there under the primary uptrend line, so I put this alternative trend line that comes in and captures a lot of reactions. And really, and I've covered this recently, we broke down just about a week ago, and we've been back testing that minor uptrend line from below. We're pinching. We're very close to the apex of this wedge. These semis are going to go any day now, and again, I'm being a little bit extra cautious with the official trade ideas because of the trend, and the market has been so resilient. I jumped the gun earlier on these, and we had a couple profitable semi trades, but as a whole, they were more losers than winners. And again, those were on these breakdowns here. So it's not as if these divergences don't play out. I continue to harp on that. They do. These were smaller divergences and smaller wedges, and as you can see, all the corrections are highlighted here. You'll see divergent top followed by a correction. And even though it says mild correction, in some cases, like I said, these are 5-10% or more, those mild corrections. But the one I'm looking for now, based on the larger pattern, the larger wedge, there's no more room. There's no more, the minor uptrend line now comes right in just a hair above this primary uptrend line. So when that breaks, that is a more significant sell signal. All right, 60-minute chart. Let's just get a different view than we did a minute ago on XSD. This is SMH 60-minute chart. You have this bearish rising wedge. You had a little minor wedge in here, breakdown back test. But the more significant things that stand out to me in the negative divergence, you see it on the PPO, you can see it on the RSI, my trend indicator, divergent high, breakdown, back test. And I don't see any decent support. I should say very little. Let's just not get a little bit more specific. There's some minor support there, about 76.15, but I see a clear path down here to at least 74.24 before any reaction. And again, you have to define your time frame. If you're bullish and you think at best we're just overdue, a little overbought in the markets and looking for a quick pullback, and you're comfortable with a short of about 3.5%, which again, if it's quick and use SOXX, which is a 3-time leveraged, you take that gain, multiply it by 4, that's 14% or so. It's not a bad trade. But again, you're going to have to quantify your stops as well and account for that leverage. But if you're swing trading, then focus more on the daily charts. Just use these 60-minute charts to help time your entry. All right, SOXX. Similar story. There's the bearish rising wedge, these two white lines, the negative divergence, same story as before. And I put this alternative uptrend line here. It captures a few reactions, so maybe this one needs to take that line out. Again, they're all going to look similar because they don't have the same exact holdings, but there is a lot of overlap. And here's SOXX on the daily chart. Yellow minor uptrend lines, but this is the most significant. This is the primary uptrend line here, and but right now all I'm concerned about is a break of this minor uptrend line, which we already have broken down. We've been back testing from below, and I think we'll come on down here, and then 121.35 after this white uptrend line goes. That's my minimum downside expectation for SOXX, and from where we're at right now, it's roughly a 9% drop or so. And finally, we'll wrap it up with a weekly on SOXX. There's an ascending price channel and a likely longer term target around 101.80. All right, now let's look at some of the individual components. While I'm on this one, we'll just stay here. I have my related items list right here. As you can see, I have these sorted by market capitalization. So we'll start out with the biggest company, which is Intel. This is a very busy chart, so I did a clean board for you to just show you what stands out to me. Here's an uptrend line, 1, 2, 3, 4, 5, 6, now 7 reactions. We're wedging up. You can see the vigor of these rallies are diminishing. That's just means the stock is losing momentum. This is confirmed. The PPO and the MACD are momentum indicators, and it shows you that momentum is waning. That's what the negative divergence is. So there's Intel from a daily, pretty clean uptrend line to watch. And again, I had a lot of minor uptrend lines, other things there. Take a look at a weekly chart. This is the bull market uptrend line off the 2009 lows. We had a brief intra-week break, but we snapped back above it, and we have numerous reactions going all the way back to early 2009. And again, I discard this because that was intra-week break. There was a little mini flash crash there, something that went on in Intel, if I recall correctly, but we snapped back to close the week above it. On a weekly chart, all I care about are weekly closing candlesticks. So you can see there's a candlestick tail or shadow, but boom, we close back on the trend line. Numerous reactions. So at the very least, we're going to come in and visit this trend line. And based on these divergences, I think sometime in 2017 that trend line will break, most likely. And again, remember that's there's the 800-pound gorilla in the room right there, Intel. Of course, Broadcom's a big company. You have, if you look down here, you can see the large divergent high. It's been very strong recently, extremely overbought. Let's take a look on a weekly chart. Paints a little bit clearer picture. All right, so here's your divergent high, and yes, I dragged that line up. These divergent high, we had a divergent high here. Um, didn't pan out. It panned out for just a little sideways correction. Does that mean divergences don't work? Well, they don't always play out for correction. However, what happened is we pushed up to made a new high, a marginal new high, and that is still a divergent high. It's only potential divergence. We need to see Broadcom come back in sharply. That will give us a bearish crossover here on the PPO if that does happen relatively soon, thereby confirming this divergence high or confirming the negative divergence. This must be, I must have taken a measurement. Yep, widest part of the wedge. Yeah, that to where the wedge breaks down, and that would come in line with my minimum target. You see here, this is, let's just assume that the wedge breaks down right here. That would measure right to my minimum target of 116.65. The stock's currently trading at 218, so again, define your trading style. If you're a swing trader and you can manage to ride out through the counter trend rips, there will certainly be levels to cover along the way if you're an active trader and you want to game a bounce. But if you have the patience, I think there's a good shot we're going down there, and that's a 50% drop in that stock. So not a bad return if it does that. All right, Qualcomm QCOM. I wouldn't touch it. It's already corrected. Here's one of the leading chip stocks. This is a daily chart, quite busy, but this was the uptrend line to watch. Breakdown, back test, and good night. It started rolling over and then gap down. It's already cleared out. See these divergences that I had? It was a divergent high, and yes, it played out, but it's already played out for the expected move and then some. That doesn't mean Qualcomm can't go down. I wouldn't short it. I don't think there's nearly as much meat on the bone for a Qualcomm short as there are some of the other stocks that I just talked about. In fact, here's a descending broadening wedge pattern, this line and this line here, and we're back testing that. There's also horizontal support here, long-term support. These two lines together make a rising wedge. There was a breakout. So again, let's just get away from that one because I wouldn't touch it. There's no need. Texas Instruments. I'm moving fast here, guys, because I want to get through enough of these. I can't cover them all. There's too many semis. But here's Texas Instruments on a long-term chart. This shows the entire bull market. We're looking at a 10-year weekly chart. And we would just have to take this line back a little farther and show you that just long-term divergence. Overbought reading. This is something I should have hit on these other stocks here. When you see these extreme overbought readings, see as we're just coming off now, and that's also a divergent high because prices are making higher highs. See how the top part of this wedge right here, this top part, that's negative divergence both on the RSI and the PPO. Sometimes you have these one and done overbought readings and then the correction, and that correction again on a log scale. Do not underestimate these moves. It might not look like much, but that was over a 30% drop in Texas Instruments, and I don't see anything in the charts that indicate we won't get at least that much, or at least revisit that trend line there. That's 21 and about a 21% drop coming back down to that trend line right there, which is also very nice horizontal support. So my most optimistic scenario for this stock over the next, let's just say 6 to 9 months, that should cover it, would be a drop of 20% down to the $60-ish level. All right, I already covered. If I didn't cover the daily chart, here it is. Beautiful, clean, bearish rising wedge, negative divergence, and that's that. So there's your sell signal. You set alerts. Just replicate these charts. Use a log scaling. Set price alerts. And my point is, trading stocks or trading a sector. I could wait. I'll use silly analogies sometimes. It's like a defendant in court, and you're guilty until proven. You're innocent until proven guilty, and the prosecution has to prove beyond a shadow of a doubt that you're guilty. So right now we're in a strong uptrend in the broad markets. Therefore, if you don't want to get burned again, if you've already shorted the semis or you haven't shorted them yet and you don't want to get burned, you wait until the evidence. There's a preponderance of evidence. A ton of these stocks, these leading stocks, all breaking these primary uptrend lines on the daily charts. Some of those are a little too far away on the weekly charts, but at least wait for breakdowns on the daily. You can get that early jump start on the 60-minute. But my point being here is this. If you're watching, let's just say you want to short Texas Instruments, none of the other semis. This isn't your only sell signal. This would be a sell signal on Texas Instruments. It would be a technical breakdown. However, if those semi ETFs that I just covered, if Intel, Broadcom, all these other stocks that I'm covering today are still above their primary downtrend lines, you know what's likely to happen if they don't break down, then any little breakdown here is likely to be a false breakdown, whipsaw signal. God knows we've seen enough of those lately. So that's why I'm trying to impress the point that the more of these trend lines break, you can set price alerts on them all. And you'll probably notice this. There's going to be one day or a period of a few days over the next, my guess is the next few weeks here, where if you set trend alerts on all these uptrend lines, which on the daily or 60-minute charts, you're going to have alerts going off like popcorn on your screen. I've done this a long time, and I can sit for days and weeks with a bunch of price alerts set, and all of a sudden one day in the market, especially if I'm watching a sector, bing, 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 they're all going off because those stocks are going to break down together when the sector goes, and that's your all-in signal right there. NVIDIA, this one I like. This is one of my favorites. Rising price channel, the red line's ascending price channel, breakdown of this minor uptrend line here, a bearish engulfing candlestick at the highs. We hit the bottom of the channel, danced around it for about a little over a week there, and then broke down. And we've been hugging this 99, 90-ish, call it, support. You can see, give or take, add 20 cents or so to that level. And we're just barely clinging to that support right now. And looking at the scope of these divergences, the fact we had that bearish engulfing candlestick, how overbought the stock was, this one looks to be going down to any or all of these levels down here. There's your targets on NVIDIA. Let's take a look at the weekly chart. Just an insane move. And now we've broken down. Here's that same uptrend line shown on the weekly chart. We've broken a weekly key support line. We closed right on it last week, and so far this week we're trading below. Now the week isn't over. Can this thing suck back up and close up or above or on that trend line? It could. I don't think it will, but that's one to watch. And there's a lot of meat on the bone because that one's probably headed down to about that. I'd say the $69 area at least. It's a very steep uptrend line. Steep uptrend lines with extreme overbought readings. I've covered this chart before. This one right here, we had a divergent high. Let me get away from that line so it doesn't move it. We dropped 52%. Here we had the same extreme overbought reading. It didn't last even as long, and that still resulted from, we'll just measure the quick pullback. That dropped 54%. There's another one. I'm going to guess that's probably a 25-30% drop. 23%. And now this is the most overbought this stock has been in at least a decade, probably in its existence. And so I'm looking for a lot more than a 10% pullback. Let's just say that. All right. I don't want to go into too many more. I think you get the point. And TEPS, I will follow up with some individual. There's just too many names. If you look at the watch list, this is just the holdings of SOXX. And you can see here as I scroll down through there's a lot of semis out there. And so I'll try to pick some individuals. But my point is I just wanted to take a look at the sector, point out that there are some semis that have already, a lot of the downside's probably out of those by now, so some look better than others. And the ones I like the best are the ones with very well-defined trend lines or chart patterns. If I look at a chart, let me try to find one real quick that just doesn't, see, this doesn't tell me much. Skyworks, SWKS. Not crazy about the divergences, not crazy about the price, the levels on it. This one had a rising wedge. We overshot the wedge. The uptrend line's been sliced through, so again, I'm not crazy. There's some I like better than others. Xilinx, I don't even have an opinion on that one. Oh, I promised AMD, and then we'll wrap it up here because that was the one of the requests that I had. All right, AMD. This is what I'm watching. These yellow lines form a very clean bearish rising wedge pattern. You can see the uptrend line here. Numerous reactions. Negative divergence. We had divergence there. It was confirmed. We had a little hiccup. We bounced up, made a marginal new high, but look at this. The PPO is quickly curling back over and now making a bearish cross as we speak, so therefore that divergence is now confirmed. Still have divergence in the RSI. Your sell signal would come on a break of this trend line, although personally, if I look at the stock, I think it's probably done. Then again, I've been saying that for weeks, so you want to play it safe, wait for a break of the trend line. I have to move that line up. This is your first minor support here around 1235, and I should certainly add a trend line of support right here. This would be your next support or target around 930. And I'll just have to, if anybody wants targets on these, I haven't updated this chart in a while. I'll have to give you targets, but I'd be looking at these three lines right now for the first three. And if this gets really ugly, we go back down here. This was a target I had earlier in the year. I don't know if it was hit there or not. 574. That might be a longer term downside target. And just to take a look at the weekly, in fact, I did a video. This reminds me, there's so much on this chart, especially this weekly chart, that I did a video. So if you go onto the site and on the front page, on the home page, on the right-hand sidebar, there's I think it's post by ticker or select ticker box. Pull that down, type in AMD, do it in relatively quick order. If you hit A and you don't hit the M and the D quick enough, it'll only pull the A's up. Hit AMD and then enter. It'll bring up all posts on AMD, and you'll see a video where I make the case for not a little correction in here, but a big drop on 20 to 50% or more based on the chart and based on the past history of this stock, as you can see here. All right, we'll wrap it up there. This has been Randy Finney with Right Side of the Chart, and if you have any questions on any individual semis or anything else for that matter, just drop me a line in the trading room, and have a great day.